All right, let's do this. It's Monday evening, December 29th. Let's start with commodity gold, which settled down $196, 4.3% to 43.34. Looks like we're heading to test the 50-day 41.73. RSI has swung from around what 80 to about 54. So we've burnt off a huge amount of overbought conditions. Just one down day. And I would accept the Bulls could argue that, hey, look, we had a big down day there. We chopped around for 3 days and we had two more down days, and that was all that happened. So you could argue that maybe we come down a little bit further. Now, in this case, in October, we held the 50 day. The 50 day is in jeopardy. If it's taken out, then, you're looking at 4,000 rather than 41.73. I mean, at the current rate, I don't expect a bigger drop today, tomorrow, and it's not likely, right? But that candle is certainly suggestive of we're going to go down a bit lower, right? There's no question about that. Notably, and this is the thing that does concern me as somebody who wants to buy back silver, daily momentum in gold will turn negative at the Tuesday open, and in theory, it could tick down all the way into next week. In theory, you could see a washout like that, uh, which is that there, right? So we literally only just rolled over today, and momentum will turn negative tomorrow, that's a problem for Tuesday. That's a problem to anybody buying right now. Let's jump to commodity silver. I will look at the smaller time frames as well for silver, if only for my own personal interest, because I am considering buying back. So, according to stock charts, silver printed a new historic high of 80.15. I did see on another website though that suggested that silver printed $83 or so. But regardless, silver did print a new historic high. RSI is cooled though from almost 90 to 67, so we're no longer overbought. Um, Today's candle is not quite bearish engulfing. We didn't settle below last Friday's open, but it's close. I would note the 10 MA and the 69s. If that doesn't hold, then natural target would be the 50 day, currently 55s, although that'll be around $60 next week. Now, a lot of support around, you see here, a lot of support around 58. So you could, we could come down to another $12. Now, that's clearly going to take 3, 4, 5 days to get there, but it's, um, it's a short-term concern. That is a big, I mean, that's one of the biggest drops we've ever seen. Ironically, or notably, we dropped $6.66, 8.4%. I would note in terms of the MACD momentum, we do have a rollover, but at the current rate, momentum's not going to turn negative until at least Friday. So Tuesday, you imagine here, if you project out Tuesday, Wednesday, and then the Friday, January the 2nd open. So in theory, January will start on a bearish note for silver. Does that mean would I short it? Absolutely not. I have a literal, and I've said this recently. I have a no shorts rule on silver, and we're talking like 5, 6, 7 years out. I'm not going to short this under any circumstance. I think that's just overly complicating things. From my perspective, I'm clearly trying to make gains as I've done recently, but I'm not going to short it. I would rather just sell as I did on Friday and then look to buy back. The issue is how far we're going to go down. I don't know. It does look like considering the power of today's candle, and it is a powerful drop. In fact, it's the biggest nominal drop we've seen in the last year. I mean, that was a big drop in mid-October. We had two big down days in the April, which of course, again, the April drop is a good reminder that if equities get whacked, silver will typically get dragged down as well. Look at that, silver 28. We're never going to go back under. We're never going to test the April low ever again, right? Ever again. You'll never see $28 silver ever again. In fact, I'm actually quite suspicious that we'll never see sub 50 silver ever again. I mean, today was rough, but hey, you can't go up in a straight line. I was saying that last Friday, which is another reason why I sold, right? I'm very cautious, especially about the metals. I've been through this before. I know what it's like. It's like you get little bouts of hysteria and then it ends badly. I mean, I was just before I started doing this video, I did check the SLV February call chain, and typically most of the option calls were down 40% today. 40. So just a 8% drop in, well, just it's not a small drop, but 8.4% drop in the SLV, the underlying, and the related call options were down typically 40%. So a horrific drop. And imagine if we come down to the 50-day next week, say around $60. Well, those call options are going to be, many of them will become worthless. Well, at least maybe down another probably 70, 80%. But anyway, this is an ugly candle. In fact, actually, no, it's not bearish engulfing, is it? Yeah, it's just not. It's just a teeny bit shy of being bearish engulfing. But anyway, I'm suspicious that we will see sub silver under 69, which would take out the 10 MA, and then we're probably going to come down to 60. So I think the concern should be to anybody looking to buy, myself included, that the cautious are going to try and wait for $60. I would accept the notion that I could be wrong. We could just bounce. We could just bounce off for 10 MA tomorrow morning, right around 69 or somewhere around 70 to 69, and then off we go again. Be like a 2-day washout. I don't want to miss out on that trade, but the gold chart again, momentum will turn negative tomorrow. Silver momentum prone to turning negative on Friday at the current rate. I mean, look at this. Look at this. I mean, look, if you ignore the histogram, which is one aspect, look at the MACD. This little black line has never been higher. I mean, look at how high it is relative to October. What you want to be buying it when it's somewhere around here, right? That's where I want to be buying it. I don't want to be buying it up here. I mean, I bought it on Christmas Eve and I realized, hey, look, this is you're looking for one more lurch up and get the hell out, which I did, fortunately. There's the possibility of downside. There is a lot of potential downside. We could come down for a couple of weeks. I did want to look at the short-term cycles. I'll use SLV as a proxy. I will say, yeah, look, so officially SLV was down 7.2% on the day. Note price structure. So we gapped down. The opening candle was a reversal. Yellow gap filled. What is this? You know what this is, right? This is a bear flag. This is a bear flag under the 10 MA. So in theory, this is going to play out tomorrow, and we'll come down to tag purple gap. We'll probably fill it actually, maybe to the 61. So we could come down another $5 off SLV tomorrow. And you have huge gap support. I mean, you have this big red gap that wasn't filled, yellow gap wasn't filled, and often I've noticed that the market does like to bounce off a 200 MA on an hourly chart. So that's currently 54s. Again, that's $12 down. That would roughly equate to silver around maybe, again, $60 next week. So SLV would be roughly 50, 55, 56, somewhere in yellow gap. So ideally, right, as someone who's super cautious right now, I would like to buy back in yellow gap, this one. I accept that looks a real stretch, but hey, that is a bear flag on an hourly chart. And we could if it's possible we open up tomorrow morning, but I wouldn't even care about that. I shouldn't even mention it, but I think there's a good chance that we have a yellow gap early next week. Well, not early, but sometime next week. And that would be a much, much better place to be buying back, right? I mean, buying back in the 57s is a lot better than buying up here. I mean, God, you got to think how many people were buying on Friday. I don't have the volume on this chart, but you got to think how many people were buying into the weekend and then smash. What do they do? Do they exit? I mean, they should have exited in theory. But anyway, that's a bear flag. In theory, that will play out tomorrow. Part of me is tempted to buy a little. I am tempted to buy a little tiny position around 61 and maybe try and trade it for $1 or two. But, I'm concerned about the daily charts. And I will actually, I will jump to the weekly charts for maybe. I mean, look, this is silver, commodity silver on a weekly chart. We have a provisional rollover here. We could come down for, in theory, we could come down for a couple of months. We could just churn sideways, kind of like we did here in October, November. You see this, what did we form here? This is just a bullish pennant, right, which played out, but you can count the weeks. If you count the first week, 3, 4, 5, 6. So you had 6 weeks, and then the 7th week was the breakout to a new historic high, and then off we went. And note, in this case, we still held for 10 of May, and the 10 of May right now is 59. You got to wonder, can silver come down to $60 by next week? I would be a buyer at 60. Yeah, I would be a buyer at 60. And just a quick look at gold on a weekly chart to give some perspective. Yeah, it doesn't look good, does it? I mean, look at it on a cyclical basis. We had a little spike last week, but we've rolled over again, and you think we might have momentum turn negative maybe next week, and then maybe we could level out. But again, look at this. This is on the high end, right? We could come down for a couple of months or just churn sideways in price just to reset the overbought conditions. I mean, it's just one down candle, but I still think there's no doubt. There's no doubt in my mind that 5K gold is coming and silver's got to go to 100. But there's always the threat that we're going to get just either more sideways chop forming another bullish wedge, or just some kind of larger retracement. Hey, nothing goes up in a straight line. Cautious will be such. What else do I want to cover today? Hmm. I guess we'll just scan for a few names, see if there's anything interesting. I guess the miners. Look, Agnico Eagle Mines, very reflective of the sector, down 6.5%. Um, Again, this is a good one, actually, because you can see the MACD is going to turn negative probably on Tuesday morning. So that's in theory that's bearish for a few days. Note the volume today, although again, uh, double Friday, but still not super high. American Eagle, look at that, a little bit of strength there, up 2%. It's pretty good. First Majestic Silver down 4%. Yeah, this is an interesting one. So Friday, new historic high, but a black candle. short-term bearish, right? Today's candle, hollow red reversal, which leans short-term bullish, but daily momentum has turned negative. And look at this. This spooks me. This should spook anyone, right? Look, this is bullish. There's a buy. I mean, you could argue there's a buy signal and there's a sell signal, right? Purely on a MACD histogram basis, you buy there, you sell there, and we're clearly on the high end. We could come down like in October when we floored in terms of First Majestic, we came down from the 15s to the 10s, and then we put in a marginally higher low. So you have a little cyclical divergence there. But that took how long did that take? That took so in that retracement it took, if you just count, well, 2, 3, 4, 4 weeks plus another two and a bit, roughly 6 weeks ish, and then we yeah literally that candle there, that's the buying level. So you wouldn't have bought the first low. Note that low, that candle filled orange gap. Kind of interesting how that happens, right? We have a marginally higher low, and then off we go from 10s to the 17s. So, which of course is 70%. 70% in literally 5 weeks. 70% in 5 weeks. That's incredible. Oh, I don't want to get bogged down in anything here. Let's flash through a few more. Barrick Mining down 4.7%. Again, Barrick has a hollow red reversal candle, but look at this. Momentum's turned negative. You'd have been buying that. There's a sell signal. That's a problem. That's a problem. What else? Deca's one of my favorite shoe companies in terms of a stock, anyway. So they had actually closed up, what's that, 0.6%? Look at it. Look at this. It's really close to a breakout. Once you get above the 200-day, in theory, it's going to go to 125. I mean, I could be buying this, but I've looked in the options market, and the spreads and the calls are just too wide. So I'm considering Nike instead of Deckers, which, by the way, yeah, my target 125 and then 150. My target for Nike, let's jump to that. My Nike target is 90. So Nike settled up 0.5% today. Momentum in Nike's got to turn prone to turning positive in 2, 3, 4 days. Probably maybe on Friday, either Friday or next Monday. It's not a bad level to be buying it at. So I'm thinking about this one. Clearly, soft target is a teal gap and a 200-day 66 is. That's $5 up. Things turn interesting when you get above 70. Yeah, because once you get above 70, then there's another $10 to around 79. There's a little micro double top here. I like this one. I am thinking about. I'm actually thinking about buying calls tomorrow on this. If I get them, I would probably get. Well, I definitely get no less than February. I might get March calls though. I think the Nike calls are actually reasonably priced as well. They're not expensive right now. And of course, Nike's a Dow component, which gives more better spreads and better liquidity than Deckers, which of course is not a Dow component. All right, what else? Freeport background was just whacked with the main market. Copper was down like. Let's just check copper. Copper was down 26 cents on the day. Now that is a bearish engulfing candle. Look at that. Closed at 550. Yeah, 550. That's a bearish engulfing candle. That's bearish for tomorrow. Also, daily momentum is due to turn negative either on Tuesday or Wednesday. That's not pretty. What else? Yeah, Lockheed, a good defense company, up 1.2%. Momentum is pretty positive. Oh yeah, before I shouldn't forget that, right? Netflix, of course. Netflix was down 0.3%. Momentum still positive. I mean, it's not great, right? It is. It's It's midterm bearish from the 134s in July. Printed 91s last week. Next support is 82. And of course, on a monthly chart, my issue is that my concern is that this has a a more natural target would be $70, which was last printed in November 2021. Again, look at this. On a momentum chart, it's like, hey, look, we're going down further, right? Maybe another month or two, maybe at least a bit. I mean, you got to think there's zero sign of a turn here. So we're what are we at? 94? I mean, I accept $24 is a long way down, but there's no sign of a floor on a monthly chart. All right, what else? Oh God, yeah, orbs. So from what I understand today, stock is up 10% because they did they announced $125 million buyback. It's a desperate measure. It allows, think about this, rather than, I guess I was gonna say invest, but rather than speculate or gamble on various crypto coins, the company's got to use $125 million to buy back the stock. And it's still at 184, which is only 20 cents above last week's abysmal low. This is terrible. And where's Dan Ives? Has Dan Ives got anything to say about this garbage? I'm guessing not, right? Pan American Silver, yeah, that merits because that's the leading silver miner. Down 5.7%. I will say, yeah, today's candle is not a reversal, but yeah, that's bearish. Look at this. Momentum will turn negative at the Tuesday open. You're gonna get a sell signal tomorrow in Pan American. And look at how high it is relative to October, right? October it was high. This is ridiculous. It's basically been there's your buy signal, right? In early November, and you get little cooling waves, but the momentum stays positive every time. So you had like one up, wave two, wave three, and a fourth wave, and that's it. We're done. Four waves up. Momentum's gonna turn negative tomorrow. That's a sell. So then it's like, okay, how long could it go? A lot of support. Actually, look, natural target 43 to 42 with the 50-day. Not this week, maybe probably next week, I guess. So 42, that's $10 down. That's about what? That's about 18% or so. 18. So anybody buying right now, you are catching the proverbial knife. Not such a great thing. What else? I mean, SMR just keeps falling. Look at this. Look at this. I mean, when it was 57, I called for 20. I'm actually pretty stunned to see it in the 14s. 14s, we're not that far from the April 11s. That was back when the S&P was 48.35. I like the company on a long-term basis. At some point, this will start going back up again. There's nothing wrong with this. Nothing is adversely changed with the company since I would accept it was a hysteria bubble, and of course it reversed. Also note that candle. What is that candle? It's a bearish engulfing candle. Zero sign of a floor. Interesting. Tesla, actually not Tesla. Target down a bit. You know, Friday's candle was spiky, short-term bearish. Um, Here's Tesla. Tesla was down 3.3%, fourth day down. Orange gap filled. Next support is the 50-day 444. That's $15 down, which we will probably actually see on either Tuesday or Wednesday. I could understand some people even buying, into month end. I did call for 460 last Friday. That was kind of cool to see that printed today. United Health, of course. Uh, yeah, what was it down 0.9% with the main market? I mean, look, it's a lot of chop. At some point, you can see how actually the 50-day and the 200-day getting very close together. I think we're going to see a bullish breakout. That's my hunch. I will say I was looking at the options chains earlier, and I'm like, damn, the options are expensive. Of course, the stock's $328, so it's like $1,000 a contract, and that's even if you buy $30-40 out of the money, $1,000 a contract. But this does look like it's going to break up and away. In which case, if it does, then the natural target is green gap. Basic target would be 472, and then you think end of next summer 573. And this is a boring Dow component. You got to think people are going to chase this once this breaks above. That's when it gets interesting. And of course, my beloved UPS, which I don't own yet. I was watching it today. It was down 1.4% of a low, closed down 0.9 in the 99s. And, on a momentum basis, its momentum's marginally negative. It's probably in theory, it should level out within a couple of days. I don't expect it to come down here. That won't make any sense. The August. I mean, you have a marginal double low of 81 to 80. And my guess is this is going to break when this breaks above 102. Off we go. There's a gap. There's a gap that goes up to the 125 area from late January. Remember that? Actually, that gap from the 125 is in late January. What was that gap about? Oh, that's right, earnings. That was an earnings gap, right? Then you have earnings in. When would the next earnings be? 1, 2, 3 here. I guess. Actually, I'm not sure. That could have been an earnings gap. This was an earnings gap on the upside. Look at the black candle from the 200-day. That was a sell signal, and you could be buying it again here. And now we're just kind of trundling around. I'm guessing we're going to break above here sooner rather than later. I want in on this trade. This is my number one target. So I'm looking at the March calls 105s to the 110s. I think particularly matters what ones I get, but I do want to get some. It's kind of weird how things work out. And if you told me a month ago that my primary target, other than silver, would be UPS, I'm like, what, really? I mean, it's got a good yield, right? The yield is like, I think it's 6.5% or so, maybe 7, but it's around it. But it's a good yield. It's a leading transport stock, good company, good service that I've used myself. And it's like, look, if this can break above 102, then it gets real interesting. And I think there's a reasonable chance that by early February, this might be somewhere around. I mean, I think 120 to 125 looks realistic. I mean, hell, look, it was $80 in mid-October. It went up $22, which is 27%. It went up 27% across what? 2.5 months, 10 weeks. 27% in 10 weeks. I'm thinking 120 to 125 by early Feb. That's 6 weeks or so, 6, 7 weeks. Yeah, it also assumes that earnings are going to come in okay and that the market will be fine to bounce it like it did in late October. So I'm looking for, ideally, I'm looking for 110 to 115 by late January. Then I want it to gap up like it did in October, around 10%, which would get me to 125. If that's the case, my calls will be up 1,000%. Again, I do not own right now, but I am looking to own. And it is kind of weird how this just like this is my number one target. There's others, of course, United Health, Deckers, Nike, and of course there's silver. I'm still an interested buyer in silver, but I want to, I'm not going to be. I'm going to be very cautious until the daily and weekly charts level out, which could be some weeks. I'm not going to go over it again, but I think of all those miners I was just highlighting where daily momentum is only in the process of just turning negative. So they offer downside for a couple of weeks in theory. It'd make for a great buyback level. I think I'll leave it there. Interesting day, kind of sleepy, somewhat red. So I'm going to hope that UPS is down tomorrow morning and I might be buying. And of course, silver, I really should leave it alone. Yeah, I really should. Anyway, have a good evening and a good Tuesday.